Litecoin reached a corrective top, and we're going to see the price go below $40 over the coming weeks. It's highly probable, and this is how you can pick the tops and sell, so you can also buy back at the bottom. So let's dive straight into Litecoin. Don't forget to like, subscribe, hit the bell notification. Let's get straight to it. With Litecoin, we are on a daily chart, and I've just zoomed out to first remind ourselves of the macro. And we've been on this downward trend for quite a while. You know, the whole market's been in a bear market, but markets tend to move in fives and threes. And when I'm looking at this top and it unfolding to the downside, what it looks like to me is a first initial move down, a correction over here, a wave 2, a wave 3, and what looks like to be a complex correction of a potential wave 4. Now, what that means for the market is if markets move in fives and threes, more often than not, there's quite a few factors telling us that we're likely to see Litecoin go down below $40. So let's just go over those points. I'm going to keep it relatively high level. By the way, if some of this goes over your head and you want to learn more about trading, I've actually created a 4 secrets masterclass. It's free, it's in the link below, and it covers what we're covering today in a lot more detail in layman's terms. So what we're going to look at here is momentum. I've got my R15 trend identifier dashboard. So on Litecoin, the weekly momentum is called overbought. And what it tells me is that the upside is limited because market tends to move in these rhythms and cycles. And a momentum indicator, my favorite is the stochastics RSI, can be really, really helpful. The daily is bearish, and we've got something called bearish divergence. I'm going to cover that in a second over here. We've got pattern. We spoke about that. This is a potential wave 4 breaking down to an A, B, C, D, E structure. Is the most common complex correction. We've got some Fibonacci price ratios. These are particular buying and selling behavior ratios for wave 4. So we're highly probable to see the price continue to the downside below this low over here. So now let's just zoom in to Litecoin so we can really articulate this last part of the market and what I'm talking about here today. So let's just cover this again in a bit of detail. We got a bearish reversal over here and over here. But what we can see is that is a lower bearish reversal. But the price is slightly higher. That's what you call a bearish divergence. That's a sign of weakness, and that likely means that the price is going to follow through to the downside. If the price goes below this low, that's called a pattern reversal signal. Because when you're in an upward trend, you can see that this low hasn't been exceeded, this low hasn't been exceeded, this low has not yet been exceeded. But when a low does get exceeded, that is a first early confirmation that this top could be in play, and then the market's going to reverse. We've got the trend identifier dashboard also telling us momentum is on the downside. Consider selling. By the way, if you want to test out this trend identifier dashboard, you can now test it out for £1. It's phenomenal, but make sure you put in the work to learn how to use it. I've created a short, sharp course, not only how to set it up, but how to really utilize the trend identifier to add to your current strategy. We can make a big, big difference to your trading. £1, 30 days. Check it out. It can make a big difference to your overall results. So now let's just slow it down for a second, because I know I've got a habit of speaking fast. Is to go, okay, what are we saying here with Litecoin? Now, notice that I'm not talking about the fundamentals of Litecoin. Why? Because it's been proven now that price has already got the fundamentals baked in. How everyone participating on Litecoin, how they feel, buying and selling behavior is baked into this particular pattern right now. So if this is a top, again, we're going to put a question mark here. What do we anticipate? Well, the way I'm going to trade this is twofold. I ideally want to see the next bearish daily reversal. I'm looking for some immediate short opportunities as well, but I'm probably going to wait for the next daily bearish reversal. And what I'm going to do is I do something called double think, where you have to, this what the best traders in the world do, is you got to assume you're right and wrong at the same time, because there's no way of actually knowing. And this will be a good example, actually. Let me show it to you like this, because this will be an absolute game changer on how you manage your risk. If I just take the market back to over here, right, I'm just going to take the data to over here. Now, at the time at the time when this was unfolding, this movement here, this looked like to be, and still looks like it is, a wave C. And the most common type of correction is an ABC zigzag. And that's what this is right now. And what the likelihood of the behavior is price to go below this point here. So we're going to short the market and make a lot of money on the way down. But to use double think, what you have to do is ask yourself, if you're wrong and this is not the top and the price is going to continue to a new high, what's the minimum that the market is highly probable to do before it does that other behavior? So I'm going to break this down, because if you can get this concept into your mind, it'll make a very big difference to your long-term results. So, and this is exactly what we're doing with the current correction. So I've backdated the data just so we can have this clear-cut example. Let me just change this to, let's just change the red. And let me just make it a minor. Okay, so what is the minimum that should occur? Well, the minimum that should occur is typically a 50% retracement. This will make sense to you. This will make, and especially if you're taking my masterclass, this will make even more sense to you. More often than not, the typical movement that any market makes, regardless of what it is a minimum of 50%. So we can be relatively confident that the market is likely to reach this price zone over here in this example. There's also something called a time ratio, and a typical minimum time is this ratio over here. And I'm going to show you this because this is exactly what we're going to do again for the current move. Well, let me just readjust that here. So now we would look to short this market, and we can see that Litecoin went down and then it unfolded nicely to the downside, right? We see that. And at this stage, we know in hindsight what's happened, but at the time, in the live moment, this would look like an initial move, potential wave 1 or A. This here would be a 2 or B. And this movement here would be a 3 or C. And this is why you'll see me putting question marks to say, look, it hasn't been confirmed. If the price goes back into this range over here, then we know something else is happening. If the price continues to the downside, then we got a good downward trend in our favor. So now let's just unfold the data where we know the exact moment where we know something else is happening and we need to reevaluate. It'll be on this price overlap over here. And the reason I show you the minimum, so what you want to do is at this stage and moment, when you're in this point, when you're risk-free, you've got your, locked in some profits, is at this moment in time, I want to loop this, is what I want to happen, one of the scenarios would be this, right? And we're going to make a lot of money and then look to exit the market down here. However, we want to say, look, it's done its minimum because it could be a potential ABC, where I want to lock in some profits, make sure we're risk-free on the other half of our units. And then what would void the wave count? And that's where your stop loss goes. So our initial stop loss might have been here and then over here. And then it's this overlap. The market should not overlap into this range if it's to continue to the downside. And if it does, it means something else is happening. And you can trade this in a few different ways. But now let's just unfold the data, because this is the reality of trading. So when we unfold the data, we know at this point here, in fact, more when it's this point here, it closes in this range, and that would void the wave count. And I'll go, okay, it doesn't look like it's going to continue to the downside. Something else is happening. So now we would say it actually looks like a complex correction is unfolding. Right, so then we'll get rid of all of this. And then we do the same thing again, literally the same thing again. So we're literally doing exactly that right now. If we just unfold the data, it looks like a nice 5-wave structure. And we are literally over here now in this part of the market. So what do? Exactly the same thing. We're going to look for a shorting opportunity. And let's say we get triggered. Let's say that we had a reason to go short on this swing low over here. Let's just make it green. Say that was our entry. And we say we want our initial stop loss either on a 1 bar high or on a swing high to be over here. I would normally look to enter this on a 1 hour time frame to get a higher entry. My next question is, right, what do I expect to happen? Well, I expect Litecoin to go below $40. Why? Because of this complex correction, this potential A, B, C, D, E. So I expect it. I want to ride the trend to below this point. That's what I want to do. That's my business thinking. I want to see a nice trend to the downside into this range over here, make a lot of money on the way down, shorting the market, right? It's just independent, staying neutral. Whether I love Litecoin or hate Litecoin, doesn't matter. Buying and selling behavior is buying and selling behavior. So it's going to do what it's going to do, whether I love it or if I don't love it. I'm neutral to it. So what we're going to look at is, well, this is how we want to hold the position for part of our position. But I'm going to ask myself the same question. What should the market not do? Or what's the minimum that is likely to do if we're wrong? Well, it's the same thing. Same thing is, I would anticipate some type of three-wave move to the downside as a minimum. How do I know what's that's likely to be? Well, I just do a nice retracement. And the typical minimum is 50%. So now Litecoin is likely to pull back to at least $77. And typical maximum, if it was doing something else other than what we're looking for, $67. So we still make money even if we're wrong and the market continues up like it did previously and is doing some type of further complex correction. But we have no way of knowing that at this present moment. So we want to look for the high probability trade. Again, keeping in mind, we've got pattern, we've got price, we've got momentum on the dashboard. We can see that really, really clearly. We've got bearish divergence. So there's a lot of things in our favor saying, okay, if it takes off on the downside, it's likely to do at least a three-wave move, but it's still a good probability. And 10, 20, 30, 40% of the time, it will end up doing that. And if we can ride that trend, that can make a significant difference to your overall portfolio, especially if you're able to compound on the way down as well. So take your trading to the next level. Check out the trend identifier, £1 30 days. It'll take your training to the next level. But do combine it with the 4 Secrets Masterclass, because one of the 4 secrets is momentum. And if you can do 2 different time frames that are pointing in the same direction, all of a sudden you have a very big edge in your favor. And that's what trading is all about. Identifying the edge and then consistently trading it without reservation. We are going to finish on a quote from my book. I think we're going with chapter 3 today. Chapter 3, yes. It is Confucius. He says the following. It does not matter how slowly you go, as long as you do not stop. Rome weren't built in a day. So again, once you take the masterclass, and there's some more advanced training that you can get as well, Elliott Wave is one of the best tools, especially when you combine it with momentum and price. Because all of a sudden you can see things from the market from an objective standpoint. The problem with crypto and a lot of other markets, even the foreign exchange markets, the stock markets, is news. And news is designed to be 2 steps behind. If you can understand that the news and the fundamentals are already baked into the price on how the market actually feels, and then you can use a pure technical approach to see what other people can't see. And even if they can see it, they get distracted by the noise. So you want to have a high probability strategy and then stick with it, short, medium, and long term.